I'm pleased to now welcome Joel Wittenberg, the Vice President and Chief Investment Officer of the WK Kellogg Foundation. Joel.
All right, well, good morning, everybody. And Rachel, thank you very much for that introduction. And I want to also share my gratitude to JLens Investor Network for inviting me here today. It's a privilege for me to share some of the guiding principles that we've used in managing our assets to support our mission for the long term. All of us in the room with the privilege of managing assets intended to advance social good and create change are really in the legacy business. We're stewards of the legacies of our founders, ensuring money meets mission into perpetuity, and the vision and the intent of the donor can be achieved. Our founder, Will Keith Kellogg, offered a simple but profound prescription to guide the essential work of the foundation. Use the money as you please, so long as it promotes the health, happiness, and well-being of children. The Kellogg Foundation is committed to ensuring children, families, communities, regardless of race, origin, or income, have the opportunities to reach their full potential. Embedded within all that we do is our commitment to racial equity, to developing leaders and engaging communities in solving their own problems. This is all a part of the core values of the Kellogg Foundation. As those of you in philanthropy know, investing this fund for a perpetuity is not easy. To be successful with these dollars, we must earn a 5% real return or a nominal return of about 8% of our investments to make payout and maintain the purchasing power of the assets. The Kellogg Trust and Foundation, we have an endowment of about $8.5 billion. It's made up of about $5 billion of Kellogg stock and about $3.5 billion of diversified investments. So for us, the investors, this is a really big deal and it's not easy. So how do we achieve that 8% return that drives our contribution to the mission? We have a solid investment philosophy for our diversified assets that we believe in and we commit to wholeheartedly. And we apply those same principles to our mission investments. I like to say that, simply put, my 11-person team looks to make allocations into assets that are evaluated bottom up and then they're going up. We look for inefficiencies in the market, we look for forced sellers and a lack of buyers. So the reason to give you all this background is it's important to give you the context with which we invest in general, because it applies to our impact investments as well. Impact investments require the same discipline and tenacity as investing in the overall portfolio. Anytime we use Mr. Kellogg's funds to advance social good, we want to use the best funding tool to make that happen, be it a grant, a PRI, or a mission investment. 10 years ago, the Kellogg Foundation was among the first to put its money to work in advancing its mission through impact investing. And we do this through program-related investments, mission-related investments, which we call mission-driven investments, or MDI, as I'll refer to it, as well as grants, of course. And focusing on MDI specifically, these are the investments that are over and above our payout and come from our investment portfolio. Our program is targeted at $100 million, and we currently have 28 investments in both direct investments as well as private equity funds. These are truly impact investments in education, health, jobs, and other areas of our mission. They've included direct investments, fixed income, private equity, all things that harness the power of the capital markets to support the well-being of children. Our MDIs are made in for-profit entities aligned with our foundation's mission and with the potential to render greater financial and social returns than PRIs. And we envision these organizations using our funds in their businesses, in their future, long after we've cashed out. So as I said, we're pioneers in this field, and our program recently hit its 10th year anniversary. We've had some smooth driving and some great returns, both social and financial, and we've hit some good-sized potholes on the road as well. One of the more recent and unique investments, to give you an example of, is a PE fund called Macro. Macro is a Los Angeles-based media company founded by former William Morris Endeavor partner Charles King to develop American film and television content rooted in and focus on the African American and Latino and multicultural market. Its mission is to shape culture by advancing the cause of racial and gender equity through the content that represents a more accurate portrayal of the diverse and dynamic world in which we live in. And you'll know some of its recent works, including last year's Fences, the recent release of Mudbound, as well as Roman J. Israel Esquire. These films give historical context at different points in U.S. history about what it's like to be Black in this country and the struggle with racism, narratives, and perspectives not often told in the mainstream media. Seeing a greater array of images and life experiences benefits everyone, particularly children of color who see their own history in addition to an audience that has been so vastly ignored by traditional media firms. We intend through this investment to amplify our mission and change the balance of racial and gender equity and diversity in the traditional media to galvanize, to inspire, and to change the conversation. In addition to the financial return of investments like the one in macro, we're at the beginning of a very exciting conversation to understand the impact of our investments. In measuring impact, we realize that there are, of course, social investment returns as well as financial. And we've developed a social thought to a philosophy that there are even larger impacts on the entire ecosystem around the community. And those returns could be so significant that they provide far greater bang for the buck than a traditional grant would. This very leading edge ecosystem evaluation transcends the traditional thinking about double bottom line, and it really pushes the envelope on measuring impact. So let me give you an example. In addition to the traditional review of things like number of children impacted from an investment, our ecosystem review will take a look at that company, and we'll ask questions like, what was the quality of the jobs that were created? How did those jobs benefit the children and the families of their employees and suppliers? How long did those people stay in those jobs? Did they buy homes with their more stable income? Did they get health care benefits from those versus their last jobs? We'll evaluate these and other questions and put numbers to this analysis. We want to look at all dimensions of how our investments are benefiting society, and we're just beginning to do that. One key aspect, and I want to add it's the most difficult part of negotiating MDI investments, is ensuring that we receive appreciation and liquidity of a diversified portfolio. And I want to be very clear about this. For the mission investment movement to achieve its full potential, we have to show that we can achieve financial as well as ecosystem returns. We're comfortable with a lower return due to the social benefits we get from these, but we are realistic, of course, but we have to achieve the financial return to make this work. Finally, I want to highlight one more area for you and give you a plug for what I believe is one of the most powerful and direct linkages between the work of the investment team and our mission for you to consider as well. There's so many directions to go in this field, and this is one that we found that's very effective. The Kellogg Foundation has historically been one of the leading voices about and funders in addressing the profound structural inequities related to race that have held back far too many of our citizens and children. And the foundation is unique in that it seeks to not just promote racial equity, but also racial healing. The key focus of this work has taken shape in our foundation's Truth and Racial Healing and Transformation Enterprise. And if you want to learn more about this incredible movement that we've started, please go to our website. TRHT, as we call it, is helping communities embrace racial healing and uproot the conscious and unconscious beliefs in the hierarchy of human value. Communities across the country, including the Jewish community, are partnering with the foundation in having honest conversations about historic racism and the structural inequities that have come as a result. So how can we, as investment allocators, do our part to advance this critical piece of our mission? As you know, Wall Street and the investment community is pretty much male, white, and financially privileged. And I asked myself, how can we make an impact sparking change in my community, of the investment community? So as another part of our mission work, we're working to build diversity within the investment community through an emerging managers program. Our goal is to generate market rate returns from new managers who are just starting out. If we do this right, we will provide entrepreneurs of color and women entrepreneurs in the investment industry the resources they need to build their business, as well as to build a pipeline for future investment managers beyond this program for our diversified assets. So working in partnership with Progress Investments in San Francisco, we're providing support and investment capital for a set of African American-owned, Latino-owned, and Asian American-owned and female-owned equity and fixed income managers. We currently have allocated $120 million being managed by this Emerging Managers Program, and as with all of our managers, we expect them to beat their benchmarks. We'll use this program to identify managers who can eventually take over larger mandates when we have an opportunity. And so far, we've had 3 managers who have taken over 4 mandates for larger assets. So in conclusion, I just want to challenge you to think outside the box, looking for new ways to connect money with mission. I wish you really great success in the contributions you're all going to make to your organizations and to the Jewish community. Please know that it's such an incredible honor to be part of this amazing group who are looking at the incredible mission opportunity that our field is giving us. And let's use this opportunity to really make a difference. Thanks very much.